Okay, so read this disclaimer first, please, guys. The clue's in the name of the channel. I'm an amateur, and I'm actually pretty bad. So nothing in this video should be taken as financial advice. Don't act on anything. There could well be errors. There could be slips of the tongue. Anything. Do your own research. Seek your own professional advice. Don't listen to me.
First of all, the ones I use are... iWeb is my main one. There's a little symbol for them. And then I also have a Hargreaves Lansdown account, which, as you'll see shortly, is kind of just left over from when I was very fresh to this whole thing, and I went with them because they were the biggest well-known name that everyone mentions, and I was a bit naive. I didn't know there was other better options out there, but it's just left over. It's not really my main account. But I thought I'd just do a little cost comparison, and with some other providers that I've never used before. I kind of started off on this little article as a starting point from This Is Money. This is a website I read a lot, and I listen to their podcast as well a lot, which is very good. I use this as kind of a baseline. I don't know if there's other providers that aren't in this list that I've just completely unaware of. But I kind of looked through the list, and I've decided to do some cost comparisons, but obviously I can't do it on all of them. I've kind of picked out some because they're just famous, and others because they seem to have a decent price structure. And I've done a little cost comparison. So I've made this spreadsheet. I didn't plan on it being this complicated, but I've done it. So there's some, as you can see, some of the formulas get a bit complicated. Well, not that one, but that one there. Some of the formulas get a little bit complicated. But I've basically, what I've got here in sheet 1 is you can enter the value of your portfolio here. Enter that there, and it calculates all these numbers. And it calculates it for different numbers of trades per year. So if you're buying once a logical thing to do is buy once a month at 12. I personally don't see why you can't just buy 4 times a year on that line. And then for each of those, it calculates the costs using Hargreaves Lansdown, AJ Bell, Vanguard, 3 different interactive investor price structures, and iWeb. And it does it separately for shares and ETFs and for open-ended funds, mainly because some of the providers charge completely differently for open-ended funds than they do for shares, ETFs, things like that. And then in sheet 2, what I've done is I've done it the other way around. So we can type in the number of trades per year, and then in each different row is a different value of the portfolio. And again, I've done it separately for shares and ETFs and open-ended funds. So for these ones that I've chosen, start with Hargreaves Lansdown. As you can see, here's their pricing structure. So for shares, it's 0.45% of the value of your shares and ETFs, which includes investment trusts, because investment trusts are just shares like any other share, like capped at £45 a year. And for funds, this is the joke of the whole thing, it's 0.5% up to 250 grand's worth of funds, 0.25% from 250 grand to 1 million, 0.1% from 1 million to 2 million. And then, aren't they generous? On anything above 2 million, they don't charge you. Isn't that nice of them? So that creates, for shares and ETFs, it's the minimum of £45 or 0.45% of the value, plus the number of trades, which is 12 at the moment, times £11.95, and the £11.95 comes from down here. But that, as you can see, that's the most expensive. But if you traded in 1 year 10 to 19, sorry, in 1 month 10 to 19 or above 20, the price goes down. Who on earth is going to do that? That doesn't. I've only gone up to 50 trades a year in my spreadsheet, so I haven't accounted for that in my formula. I mean, you wouldn't be an investor if you were doing above 10 trades a month. Sorry, above 9 trades a month. You wouldn't be an investor. So I don't think it fits the remit of my channel to even talk about people who trade 10 to 19 times or above 20 a month. And And then for the AJ Bell, very similar charging structure in terms of how it works. The numbers are just all a little bit lower though. So 0.25% instead of 0.45, 0.1, 0.05 between 1 million and 2 million. So very similar. And then instead of £11.95, it's £9.95 to do the trades in shares, ETFs. It says gilts and bonds there as well. And for the next one, which is Vanguard, obviously with Vanguard, all you can buy is their own ETFs and funds, open-ended funds. You can't buy, obviously, because it's Vanguard, they are a fund provider, so they don't want to be selling other people's funds, do they? That's important to know, but I included it here because it's a very good option to just use ETFs. Something that I'd be much better off now if I had just used ETFs in the whole of my portfolio. Not that it's going to make me change now, but anyway. So their account fee is 0.15% of the value, maximum of £375 a year. They don't charge you for doing the buys and the sells of the funds or the ETFs though, although for the ETFs, exchange traded funds, you can buy and sell them all day long, but with funds, you buy them, you tell them to buy, and then the next day, maybe at midday, they execute for you. So you can't choose the exact moment to pick whatever the price is on the open market. You have to wait until a certain time of the day where they do it for you. But with ETFs, you normally can just buy them at like 9:10 in the morning. You could buy an ETF, and at 12:20 in the afternoon, you could sell it for different prices. You know, depending on the market. But you can't do that with the Vanguard platform unless you pay £7.50 as it says here. But I haven't included that because you don't really need to trade at a specific time of day really. You can just buy whatever time of day they do it. So that's how I've worked out theirs, so reasonably simple. And as you can see, really low values, good value when the value of your portfolio is low. And then Interactive Investor, there's 3 different ways they can charge you. It's either £9.99 a month, which includes 1 free trade a month, as it says there, or for funds, well, it's weird, or it's £13.99 a month, which they still give you. I learnt this, this confused me for a while, but if you read the small print, for each service plan every month we give you free trade credit worth of £7.99 to be used against any trade. This credit is available for 90 days, so you don't exactly get 12 unless you use them in a certain time frame. But you do. But I've used 12 in my spreadsheet just for the sake of, I don't know, just for the sake of getting some comparison numbers there. But when you come to the second plan, you still get this. See, the way they've worded it is weird because you don't get 2 free funds. You get £7.99 of credit, which does equate to 2 free fund trades. But you don't have to do that. You could just do 1 UK share and ETF trade if you wanted, like you do in the investor plan. But as you can see, here's a nuance here. Funds and investment trusts only £3.99. So this is unusual. All the other ones normally have a price structure for open-ended funds and a price structure for funds. For shares. And investment trusts are shares. But in this case, for this price plan, this funds fan plan, investment trusts are £3.99 as with open-ended funds. So in actual fact, you could do 2 trades in funds or investment trusts, or you could do 1 trade in shares or ETFs. But it's £13.99 a month, and then the super investor is £3.99 for everything, so it's always 2 trades, whether it's fund or an ETF. I'm ignoring US foreign shares, dividend reinvesting. That stuff doesn't interest me, so I'm being selfish. I know some of you out there might care about that stuff. I haven't included it in my spreadsheet because, you know, this is for me really. It's a diary, it's not a how-to or a what you should do kind of channel. And then so I've used that information to put in the formulas. It doesn't need expanding that for these various different price plans. I hope I've got everything, all these formulas right. I wouldn't be surprised if there's a mistake in there somewhere. And I've included some of the things in the spreadsheet. I've included these little small print things that I've mentioned whilst I've gone through them. And then iWeb is the last one. Now look how quick this is going to be. With iWeb, it's £5 a trade and nothing else. They also charge you £25 to open the account. So it's £25 plus £5 a trade. Whether it's a fund or an ETF or a share. And look how short my footnote is. 25 one-off accounting opening fee. And look how simple the formula is. As you can see, I much prefer iWeb. So let's have a little play with the numbers and see how expensive and how cheap things can get. I'm going to use sheet 2. I think that makes more sense because I don't see why you'd go much over 20 or something. I mean, having said that, I looked at my previous, and I think my number of trades is about 25 1 year. I think 30 was the maximum I had in a year. So let's go that. Number of trades 30, and look at the numbers. As you can see, when it's a low value, Vanguard's winning easily. But this is shares and ETFs. I much prefer shares and ETFs, so I'm going to mainly focus on this. 30 trades in Hargreaves Lansdown is expensive, as with AJ Bell, £9.99. And you're going over the 24 a year you're allowed in Interactive Investor. But I mean, for me at the moment, I'm probably not going to do any more than 12. I think those years where I did more was in the building phase. I'm now kind of stable. I'm not adding any money to my portfolio, so I think 12 is more than enough. And as you can see, £60 for iWeb. For all values of portfolio, iWeb is cheaper than this Interactive Investor. Same for all three. This is rounded, by the way, to a whole number. So there's no comparison with Interactive Investor and iWeb. It's £60. You have to go as low as how high do you have to go before? No, it never wins. I don't think it ever wins. Well, let's see down here. Sheet 1. Let's put I think my portfolio is about 320. All these numbers 0, 10. So it's 120 minimum, isn't it? 60, 70, 80. Yeah, no, it never. Yeah, okay. So iWeb is always cheaper than Interactive Investor. Now Vanguard. Number of trades 0. Obviously, the more trades I do here, the better Vanguard's going to look. But as you can see, it's over 50 trades before Vanguard gets cheaper. Now for low values, pretty good value, isn't it? Look at that. So if I was doing 12 trades a year, iWeb is half the price. Where does it equal? There, 6 trades a year, iWeb's 30. So for lower values, and for people who only want to use Vanguard funds and ETFs, quite a good value one until you get into higher numbers, higher value of the portfolio. See there, you're equating to 12 trades a year. But if you only buy every quarter, you're cheaper at iWeb. So it doesn't take long. Let's go for 4 trades a quarter. Let's see how low. Whoops. On 4 trades a quarter, Vanguard's more expensive on 20 grand. I'm sure there's an easy calculation to do to find the point. Oops, that was a mistake, wasn't it? There we go, we're getting close. So around £15,000, Vanguard gets more expensive for 4 trades a year. But obviously it depends on how often you want to trade and what you want to buy. And as we can see here, AJ Bell is pretty good for 0. Well, no, it's not, because look, iWeb is 30 quid cheaper for 0, 10 quid cheaper for 2 trades, even at these low values. Yeah, much cheaper. AJ Bell's no good. Hargreaves Lansdown gets quite expensive as you go for more trades, but it's, you know, it's not completely, you know, completely out of bounds. You know, it's only about, it's less than 3 times the cost of iWeb at 50 trades. But this is where it gets silly. If we go back to this other spreadsheet where the value changes down here, when we use the second half of the spreadsheet for open-ended funds, so yeah, let's stick with 12 trades a year. That's easy. Look how, so iWeb is £60 a year. These other ones aren't that bad, all the way down. Look, because they charge you a fixed amount plus trading, it stays the same all the way down. Vanguard limits itself to 365, so that's as high as it ever gets. AJ Bell though and Hargreaves Lansdown don't limit you until you get really high, until you get over 2 million quid, and then it stops charging you extra for the funds. So as you can see, even if you're like 150 grand, which you'd expect to have at least that much by the time you're retired anyway, even if not for most of your working life, 675 versus 60, 900 versus 60, it just goes up and up and up. It's a crazy pricing structure. You know what, I think I've just noticed an error. I haven't included that for AJ Bell. Right, pause it here, let me just fix that. Okay, that's better. Sorry about that. Right, you see, that's why you need to take everything I say and do and show you with a pinch of salt, because there will be mistakes. Yeah, so what was I saying? I think basically I was just saying how Hargreaves Lansdown rips you off completely with open-ended funds. Not the complete end of the world with buying and selling ETFs and shares. Still, it's more expensive than most, but it's you know, there's a limit to how much you control it. The other thing I much prefer about iWeb compared to Interactive Investor, for example, which seems to be, I mean, for higher values anyway, Interactive Investor seems to be the better of the other ones. I mean, it's here. Look. This is an indication. I mean, it's not as bad as Hargreaves Lansdown and AJ Bell, but look how complicated that formula is. Let's see what the formula is, and look how complicated. Sorry, not AJ Bell. Interactive Investor. A bit more complicated, right, than the formula for iWeb, which is as simple as you can get. 1 number multiplied by 5, and then look how much shorter the footnote is. That's an example of why I prefer iWeb, even if it was slightly more expensive than Interactive Investor. They only take money from me when I do something in iWeb. If I buy something or if I sell it. So I can always leave the cash balance of iWeb at 0 without having to worry. And that's so much nicer. I mean, hey, I do have some funds in Hargreaves Lansdown from a momentum portfolio, because quite often the top performers in that are only available on Hargreaves Lansdown because they're not available on iWeb. So quite often I'll buy funds for the momentum, open-ended funds, using Hargreaves Lansdown. And it's annoying because I always have to check. I always have to do a little calculation each time I withdraw my funds for my dividends from the other bits in there. I have to do a little calculation and make sure I've left enough cash for the open-ended fund that I own in there. And it's just annoying. Even if it was mega cheap to do it that way, it would be annoying. I'd much prefer just to pay when I do something. Anyway, there's my little rant. What I'll do is I'll put this spreadsheet. I mean, me going through the spreadsheet's kind of pointless. If anyone wants to make use of this information, obviously I've kind of randomly selected these ones really, so I can't see it being that useful for people. But if you want to have a little play around with the spreadsheet, you can do. Just put in numbers that suit your situation. And this is how you get hold of the spreadsheet. I'll show you now. Okay, so to view the spreadsheet, you just click the link and it'll open it up. But then when you go into the spreadsheet, you'll notice it says view only, and if you try and type, it won't work. So if you want to just use Google Docs to mess around with it, you just go to File, Make a Copy, change the name, OK, and it'll think for a little while. It opens a new tab with copy advisor, and then you'll notice when you try and change the numbers like that, it lets you. But obviously if you've got Excel though, it's much easier to just go use it in Excel. So go to download in the file menu and download in Excel, click OK, show the desktop, and then you can just open it. It just has a formatting issue when it goes from Google Docs to Excel, but the rest of it's pretty good, and then you can just mess around with it in Excel if you want, which is obviously easier. Alright, I think that's it then, folks. See you next time.